Okay, the time is approximately 1:20 a.m. and want to do a review of a trade and alert that we sent out to our students, and just really want to explain some things in regards to isometry and PVSA and essentially how it sequences at the very same time to options and how they are mispriced in our favor. And the reason we want to bring this up is because trading options correctly is a counter trend approach, meaning as price is moving, let's just say price is moving up as you would see here. Okay? As price is moving up, the price of the calls are being marked up, and the price of the puts are being marked down. Now, the average trader is a buy strength, sell weakness trader because they don't know how to identify when professional money gets into the market. They've never been taught how to read volume. There are no books on it. They do not know how to get into the market at wholesale price levels. So they are buy the strength and sell the weakness. And they're scalping and so on and so forth. So buying a call option in that environment is you're buying an option that is potentially going to be mispriced or overpriced because what they tack on is what's known as volatility premium. So as the price of the market is going up, the price of the call gets marked up um, dramatically. I mean, there's just no rhyme or reason to it. The amount of price inflation that the call does. So we don't want to do that. And this is one of the reasons why the general public doesn't trade options, is because their actual entry doesn't, it will only get them into trouble. Okay? So when we identify a sequence, and if you look at any of our previous videos, we've traded crude oil for years, one of the most volatile markets in the world. The sequence is the sequence because the sequence is based off of people. And the same thieves that are in crude oil are the same thieves that are in the stock. Okay? And they're calling over to the options pit, or the options pit is calling over to them. They all know each other, and they're timing their executions in all of these markets. Okay? So, what we're going to do here is we're going to look at a trade that occurred with Goldman Sachs. And we sent out this alert. So the first thing we want to do is this is the alert with Yahoo Messenger. And so this went out, there was two actually, as we see here. So the first one went out 6:23 at 8:55. We were selling Goldman Sachs, and we were selling the vertical 170, 172 calls. Okay. Now, when you're doing a spread, when you're putting on a credit spread, you're always in the act of uh, you're in the act of selling one and you're buying the other. Okay. But because you're receiving more than you're paying, it's an actual credit. So we want to sell the one that gives us the most premium. And the one we want to sell is the 170 call. So let's go back to the alert. And the alert was we were selling the 170, 172 call. So we're going to sell the 170, we're going to buy the 172. Now, because we can't get a chart on the actual spread itself, we're just going to take a look at the option that we sold, which is, you see here highlighted, that's the 170, because we bought the 172. So what we want to do is we want to come here and let's go ahead and look at the time that we got our signal based off of our 12-point classification of all the bar types in the market. That is our edge. That's alpha for us. Okay? Because that's our edge. We can identify when professional money is stepping in. But instead of buying or selling the stock or the futures, where we have to contend with unlimited risk, where we have to contend, especially for the futures, where we have to contend with where do we place our stop, where we have to contend with a singular directional profit avenue, meaning we only profit by one market direction in the stock or the futures. So if we are going to go short in futures, we only make money if price goes down. If it goes sideways, nothing happens. Not good enough, especially if there's another advantage. So instead of buying or selling the future, we want to now turn our attention to the option market. And instead of buying the option, whereas we are going to once again have advantages that we didn't have with the futures, we can still get even more advantages by selling the option. Okay? So what are the options? What are the advantages? Well, we are, where do we start? Geez Louise. Number one, our risk is defined. Okay? So there is no unlimited risk. Number two, in no particular order, we have bidirectional profit paths, meaning that we make money if price goes in our direction, but because we've sold the option, we also make money as price is going sideways, because the buyer is suffering the time issue due to time decay. As weekly options, as we're selling weekly options, these options suffer time decay at an accelerated rate. We have weekly options that come out every week, and so we just rinse and repeat. In addition, we can sell options that are away from the action or away from the actual entry signal price. So we got a signal here at 8:55, and let's put this right here at 8:55. So right around here is where we got our signal. Let's say at 170. Okay? And so what we did is we sold the 170, 172 strike price. Let's just make sure that that's correct. We sold the 170, 172 calls. Okay? Now, here is the 170 call. At that price, that option was at $1.35 worth of premium. We collected this premium. It went into our account. That's what we get. Okay? Now, let's see what happened with that premium over the next several days. Yes, in one day, this option lost 3/4 of its value in one day, which you could have taken right there, and ultimately this option went to zero. That's the advantage of writing options. Okay, guys, meaning that the options decrease in price much faster in many cases than they rise in value, considering the time value decay component. All right, that's going to do it, guys. If you'd like to know more, of course, you can go to our site, alphatstrategies.com. We do kindly request that you do submit the trader's questionnaire before signing up for any of the course materials. Do take care.